Okay, one of the most important things you need to know is what is life insurance and what types are there out there. So let's delve into. First of all, there are basically two types of life insurance that almost everybody uses today. One is called a term policy, and a term policy is just basically it just covers in case you die. You never get to enjoy it; your heirs do. But what we also have is something called a universal life or indexed universal life. And this one actually produces income for later on when you go to retire. So when you go to retire, when you get, 60, 65, and you're going to do the deed and give up the work, you can get tax-free income from this policy because it builds equity in the policy. So in 20 or 25 years, you'll have mill and a half dollars in there. So you're getting $150,000 a year in tax-free income. And it's also protecting your family. It's protecting in case you die, your family gets a big chunk of change. It also has life benefits. Now, this is something that's kind of new to the industry. And life benefits are something that you get to enjoy while alive, but you've had to be in an accident pretty bad or a disease. Now, we have just added to the life benefits Alzheimer's and dementia. So, if you're diagnosed and you can't work, all of a sudden now you get big chunk of change to live on. So it's a great life insurance policy, and it doesn't cost that much. If you're in your 20s or 30s and you start putting $250 a month into this, by the time you're 60, 65, you're going to have a big lump of cash in there. And something else that you can do is you can also borrow against it. I mean, it's like one example is like, say you have $500,000 in there and you want to buy a new car. Well, instead of going to the car dealership and paying, 10% interest on a loan, so a $50,000 car is what, $900 a month, you borrow it from your universal life policy and you pay yourself back. So after 5 years of paying that 900, you got more money in your policy. So let's get together. Let's talk about getting you into some life insurance because it's so important. Let's say you just bought a home, right? We can put a rider on that that's a term policy that actually decreases in price as the mortgage goes down. And in case of your death or your spouse's death, it'll pay the mortgage off. It's not that expensive. It really isn't. But it's something that it's a peace of mind that your family's going to be taken care of. Because one of the number one reasons why people lose their homes to foreclosure is a death in the family, or divorce. But we're dealing with life and death there. So, yes, you got to look at this and say, you know, I need to do this, and it is so important. So let's talk. Rick Wilson at 925-305-1642. That's 925-305-1642. Okay, you can also get me at rnmwilson@outlook.com. Look forward to talking to you.